Housing in Canada has never been less affordable. With the combination of high interest rates and high prices, people are feeling the pain more than ever. But how exactly does it compare when we look at different cities across the country? That is exactly what I'm going to be covering in today's video. These days, it seems like no matter where you go or who you talk to, everybody's talking about how unaffordable it is to purchase or even rent a home. And while a lot of that comes down to your perspective and experiences in life, we're going to look at what the actual numbers say. So taking a look at this article that came out late last year, how much mortgage can the median household income afford in these cities across Canada? So initially they start off by talking about high inflation and diminished purchasing power combined with high home prices and borrowing costs have left many Canadians wondering if the dream of homeownership will ever be within their reach. While an affordability crisis seems to be a growing concern for many in recent years, and with good reason, it's worth breaking down what those words actually mean for Canadians. Now, personally, I have felt this pain as well, going from a 1.55% variable rate mortgage up to over 6.5%. However, I have planned well financially and I'm okay, but I can only imagine how tough it's been on others. And this is just coming from somebody who's actually already in the market, but for anybody trying to get in, I can just see how much erosion of their purchasing power has already occurred. But moving on, nationwide, a Canadian household making a median income of just under $80,000, for instance, can afford a home of $315,000 with a maximum insured mortgage of $299,500. Now, those numbers are not going to work for Greater Vancouver. Maybe you can get a one-bed condo out in Chilliwack, but for the majority of the Lower Mainland, unfortunately, it's not going to work. And once again, just showing how difficult it is. However, the average home price across Canada is $757,600. So right there, you can see massive gap, massive discrepancy between the median household income and the average price in Canada. So that means that the average home costs 141% more than what this family can afford, otherwise known as the maximum purchase amount. So that is a staggering number, and it's no wonder people are struggling so much. So breaking it down by the major cities, it turns out that homeownership is not only beyond reach, but in Vancouver and Toronto, it's nearly 250% and 210% more than what the average family can afford on a median income. Now, those are staggering numbers, but if you've heard before, a lot of the people that are entering the market or that are making the upsize are borrowing from the bank of mom and dad, a lot of times in the six-figure range, if not multiple six-figure range. So here's how the Canadian cities rank based on most to least affordable. So let's take a look. So taking a look at Vancouver, for instance, $411,000 is what the median income can actually qualify for, but the average price point in Vancouver is $1.211 million. Now, that's 194% higher than what they're actually able to afford. The one thing I don't like about this, though, is that they're using a composite number. So they're bunching in condos, townhomes, and detached homes because realistically, it's just not attainable anymore for the majority of families and people to get into the average price point in their first property. They're gonna have to climb the ladder, buy a couple properties first at the very least, just because things aren't the way they used to be. But I digress. Moving on, let's take a look at some of the other ones. So Edmonton is essentially right on par, where the median income is actually aligned with the average home price, as you can see, so 0% differential. Calgary, $385,000, whereas the average home price is $550,000, so 43% above. Saskatoon, pretty close with $338,000 and $376,000, 11% above. Winnipeg, again, relatively close as well, with the average affordability at $307,000 and the average home price at $346,000. And then Hamilton, 152% above. I would consider Hamilton to be similar to some of the surrounding cities in Vancouver, such as potentially Burnaby. Obviously, there's going to be a little bit of discrepancy there, but 152% above, that is huge. And Toronto, $445,000 is what the average family can qualify for, where the average price point is $1.163 million. So not quite as bad as Vancouver, but still not good whatsoever. Then we can see the rest of them, but let's actually scroll down here and see what it has to say. So breaking it down a little bit further, Edmonton, the median household income is just around $92,000, whereas the maximum insured mortgage, so essentially if you're not putting 20% down, that is when you'd have an insured mortgage, is $300,000. $351,000, whereas the average home price is $370,000. So as we showed, it basically aligns perfectly with the average home price. Edmonton more or less is the most affordable city, at least on this map. Moving on, Calgary, where there has been a lot of people moving to recently as well as investing in. There still is a differential here, as we mentioned, so $95,000 median household income, whereas the maximum home purchase price is $385,000, although the average price is $550,000. That is a 43% difference. Halifax, will also take a quick peek at $76,000 as the average or median household income, whereas the maximum affordability is $295,000 and $540,000. Halifax actually didn't think it would be quite that high, but 83% above. That is a little bit shocking to me, to be completely honest. Now, they've got a summary here kind of going from, well, it's not in order, but you can see Vancouver being the worst, Toronto the second worst. Canada overall is not great. You can see though where the most affordable cities are, but what I'm actually quite interested in is where the highest average incomes are, because we can see Vancouver, Edmonton, Calgary, Hamilton, Toronto, Ottawa all have higher average incomes, even though Vancouver is the most expensive. So interesting to note that when looking at this chart. And then we'll just dive a little bit deeper into the Toronto market. So we saw it on the chart already, but $93,000 median household income. They have both insured and uninsured. And so just a little note for anyone who doesn't know is that any home purchase price that's over $1 million, the minimum required down payment is 20% of that purchase price. However, if it's under $1 million, it's going to be 5% on the first $500,000 and 10% on the balance between $500,000 and $1 million. So that number jumps significantly as soon as you hit that $1 million price point, which makes it so difficult for those who don't already have some sort of equity built up in a previous home or some massive savings in cash, because most people don't just have that money lying around. But what it says is that for anyone reading the news, it will come as no surprise that Canada's largest city is becoming woefully unaffordable for many of its residents. Indeed, the average home costs a whopping $1.163 million, according to MLS. That's a difference of $788,000 or 210% more than a regular household can afford, which again isn't looking so great. And then we'll take a look at Vancouver as well before we get out of here. So lower income than a few of the other cities, which is a little bit surprising, but just goes to show that people love being here. And so the maximum insured purchase price, $347,000. And as far as an uninsured, $411,000, even though the average home price is over $1.2 million. So the average home price is 249% more than what the average household can afford. That is, again, a staggering number, and just why you hear so many people complaining about this. But you hear it across the country. It doesn't matter where people are from, they're complaining about affordability. However, this just goes to show that Vancouver has the worst affordability in all of Canada. Now, just to finish it off, I want to take a quick look at what else they have to say. Some small hope in big cities. While demand and housing supply drives on affordability, Lowerworth notes that all over Canada, increasing the supply of homes is a challenge, as construction financing will be more difficult due to higher interest rates. To cool the market off across major cities of Toronto, Vancouver, Calgary, Halifax, they call for all hands on deck approach that involves all government and private parties working together to restore the housing market. They've pretty much tried everything at this point. They've pointed the finger at everybody. They have the foreign buyer ban in place. They've just extended it an additional 2 years, yet prices were still going up last year. Even with that happening, they just continue to add taxes, and unfortunately, adding taxes doesn't make home prices more affordable. But I digress. Unfortunately, the government hasn't taken the time to actually look in the mirror and point the finger at themselves, but they've pretty much pointed it everywhere else. So the federal government has also pledged $4 billion towards a housing accelerator fund to help tackle the issue of lack of housing. I'll believe it when I see it. Unfortunately, I feel like a lot of the time it's just lip service, but you know what? Prove me wrong. Now, how did they come up with how much a household can afford? This is what I'm always interested in, what sort of a method they use, because as I already mentioned, they're compiling compiling all the different property types, whereas it's not really realistic. In the bigger cities, more than likely you're gonna have to get into a condo. That's what I had to do in order to start to climb the ladder. You're not just gonna buy a detached home. If you can get into a townhome, that's fantastic, but not always an option for everybody. So mortgage calculations for insured mortgages are based on the following. So 5-year insured fixed mortgage rate of 5.29%. This is what it was in August. It's not too far off right now. I've seen rates as low as just under 5%. However, a lot of the times the very lowest rate is going to come with a lot of penalties and restrictions. So just keep that in mind if you are out, and don't be a rate shopper. You can if you want, but just make sure you understand the implications, because a lot of the time people are so focused on the short term that they completely forget about the long term, and they're not taking a holistic approach. But once again, I digress. So with a qualifying rate of 7.29% based on the stress test, that's got to be 2% above this 5.29% on a 25-year amortization period, 5% down payment. So they're using the bare minimum, which is interesting, but I guess it kind of makes sense for people that are trying to get into the market. $3,000 per year in property taxes, fair, $100 per month in heating, no condo fees, no monthly liabilities, credit score of 680. So it all more or less makes sense. And then similar calculations were also made for uninsured mortgages, but they factor in a 20% down payment. So of course there is some flexibility here. They're making the assumption that everybody is only putting 5% down, which is going to mean a higher premium for mortgage insurance, but it does paint a decent picture of what housing affordability looks like across the country. So at the end of the day, while these articles are typically interesting to read and very clickbaity with their headlines, I don't necessarily completely agree with a lot of the things in them, just in the sense, as I've already mentioned, we're compiling all the different housing types to come up with an average price, whereas you're not necessarily going to be starting there, and the average person really shouldn't be. You're going to start at the bottom just like anything else in life. However, they are equating it across the country. Another thing that we have to keep in mind is that housing types vary from province to province, city to city. So the average housing type in one area is going to vary drastically from the average housing type in another. But I do think overall it does paint a relatively decent picture of affordability, just with a broad stroke. But at the end of the day, if you're trying to get into the housing market and you're feeling down because it's so difficult, unfortunately, that is just the way it is. And you have a couple of different options. Number one is you can change your expectations, because a lot of us who potentially grew up in a single family detached home, and that's all we've ever known because that's what our parents were able to buy because it was a different time, you have to lower your expectations. And if you're not willing to lower your expectations, then you're going to have to move elsewhere, because as I showed you on this map, you can go to Edmonton, or you can go to Saskatoon, or you can go to Calgary, and it's going to be a lot easier to get a nicer property, as well as the fact that the incomes are actually higher in a lot of these cities. And unfortunately, the trade-off is probably going to be the weather and things to do, but that's just life. Or you have one last option, and that's to make a change, because all you have control over is what you do. So what are some ways that you can either save more money or make more money? Because you don't have any control over the housing market. I don't have any control over the housing market. The government, they have some control over the housing market. But realistically, it's a lot of different things going on in the economy that we really don't have control over. So I beg you, take control over the things that you do have control over and stop worrying about the things that you don't. And while yes, it sucks, I get it, I'm in the same boat as you, it doesn't help to complain. So agree with me, disagree with me, unfortunately, it doesn't really matter. But if you're looking for solutions or different ways that maybe you can get yourself into the housing market, then reach out and I'd be happy to help. Because the first thing you need to do is create a plan so you can actually start to work towards your goal. But I think that's about enough for me for this video. However, if you are still looking to try and get into the market, or you're looking to upsize, downsize, whatever your situation may be, or you just want to chat about real estate, you can scroll down and click the first link in the description to book a call with me at a time that works best for you. After seeing this video, let me know what your thoughts are. Leave a comment down below. Before you get out of here, make sure you check out another video on our channel, and we'll see you in the next video.